All right, let's dive right into this explainer. Today, we're unpacking a highly polarized investment narrative surrounding one of the absolute most talked about clean energy stocks on the market today. We are looking at Plug Power. Now, this is a company sitting right at the center of the hydrogen energy conversation. But depending on who you ask, the story of this stock is either an incredible, once in a lifetime opportunity or a massive warning sign.
The sources we're looking at today present a bit of a jarring paradox. They're asking one fundamental question. Is Plug Power a hidden gem in a booming green industry, or is it a dangerous financial pitfall just waiting to swallow retail investors? The data tells a really fascinating two-sided story, where extreme market optimism is clashing directly with severe financial anxiety. We've got to start with the incredible hype. I mean, look back to just a year prior. Money market watchers were writing this company off completely. But then, at the beginning of 2026, Plug Power stock made a massive, sudden comeback rally. It jumped nearly 50%. That kind of explosive movement immediately grabs Wall Street's attention, and it forces us to ask, what exactly triggered this sudden surge? Now, this surge didn't just happen in a vacuum, right? It was driven by a real wave of market optimism surrounding new leadership, specifically the appointment of CEO Jose Luis Crespo. Investors are really hoping he's going to execute a much-needed turnaround. Plus, there's a broader growing excitement for long-term clean energy projects in general. But perhaps most importantly, the company announced a strategic shift to start producing more of its own hydrogen internally, rather than buying it at a premium from outside suppliers. That move could finally start improving their profit margins. But here's the tension, and honestly, it's a big one. According to Finviz data from mid-April 2026, a massive 344.6 million shares of this company are currently shorted. To put that into perspective, that represents nearly 26% of the stock's entire float. That means over a quarter of all the tradable shares have been borrowed and sold by investors who are actively betting that the price is going to crash. Section 1. Cash burn and dilution. So why exactly are all these investors betting against a company that just saw a massive rally? Well, back in February 2026, shareholders approved a charter amendment that starkly doubled the company's authorized common stock capacity. They went from a limit of 1.5 billion shares to a massive 3 billion shares. Now, here is where the alarm bells really start ringing. When a company with a high cash burn rate suddenly authorizes billions of new shares, it usually signals one major red flag. They're preparing to sell those shares just to raise capital and keep the lights on. As highlighted by Simply Wall Street, this massive share authorization, especially when combined with a long record of heavy financial losses, makes the threat of shareholder dilution very, very real. Dilution basically means that if the company issues these new shares, the percentage of the company owned by existing shareholders shrinks. Their slice of the pie gets smaller, which inherently puts heavy downward pressure on the stock price. Bearish analysts are looking at this landscape, and frankly, they're deeply concerned. Despite the turnaround initiatives, they see a company with massive ongoing cash burn, unresolved securities class action lawsuits hanging over their heads, and highly uncertain margins. Actually, some of the most bearish analysts were already projecting a sluggish 13% annual revenue growth. For them, the path to sustainable profitability is entirely too blurry to justify an investment right now. Section 2. The Hydrogen Bull Case. Let's flip the coin and look at the argument for long-term growth and why some investors believe Plug Power will be a dominant force. The bulls are quick to point out that Plug Power isn't just surviving on social media hype. They are deeply embedded in the real economy. They have successfully secured massive real-world partnerships with Absolute Logistics and retail giants like Amazon and Walmart. These relationships prove that there's tangible corporate demand for Plug Power's hydrogen fuel technology in everyday large-scale operations. The bullish argument also leans heavily on management's turnaround plan, known as Project Quantum Leap. This is their strategic initiative explicitly aimed at cutting costs, shifting operations, and quickly boosting liquidity and margins. If the new leadership can successfully execute this project, investors hope the company can finally stop burning cash and transition into a self-funded, profitable business. Section 3. Clean Energy Tax Credits. Now, to truly understand what is keeping this industry afloat, we have to pull back from the micro-financial metrics and look at the macro policy landscape. The Environmental and Energy Study Institute outlines how the 2022 Inflation Reduction Act, or the IRA, put in place a massive baseline of incentives. This landmark legislation established tax credits, direct pay mechanisms, and transferability for clean energy projects designed to last over a decade. This effectively created a massive financial safety net for the entire green energy sector. And this perfectly illustrates the current policy pivot that you, as an investor, need to know about. While the new OBBBA legislation abruptly killed off consumer vehicle and home energy credits, the commercial and business incentives that are absolutely vital to companies like Plug Power, well, they actually survived the legislative cuts. Specifically, the survival of the 45V clean hydrogen production credit is an absolute lifeline. This credit provides up to $3 per kilogram of clean hydrogen produced. Crucially, the legislation provides a very long runway, allowing commercial projects to begin construction and qualify for these massive subsidies all the way through the end of 2032. Section 4. Wall Street's final verdict. So the crucial point here is how analysts are synthesizing this massive dilution risk with this strong government safety net. Well, looking at the May 2026 data from Capital.com, the consensus among 25 analysts is heavily mixed, but it definitely leans cautious. A 56% majority are telling investors to simply hold the stock. Only 24% recommend to buy, while a combined 20% are firmly in the sell or strong sell camps. It's a perfect visual representation of a market that simply cannot agree on the future. And those 12-month price targets, they reflect this massive uncertainty perfectly. The estimates range from a catastrophic total financial collapse low of just 75 cents a share, all the way up to a highly bullish $7 a share. The average target sits right in the middle at $2.71. It is a wildly wide spectrum of expectations. Section 5, Opportunity or Investor Trap. This brings us back to the retail investor, looking at a stock that recently traded at around $3.31, trying to make sense of the volatility. The final analysis from our sources is crystal clear. This is a highly speculative, high-risk, high-reward investment. It's definitely not for the faint of heart. It's a situation where fundamental financial health, like tracking the progress of Project Quantum Leap and watching that cash burn rate, absolutely must be prioritized over social media hype and momentum trading. You see, there are two very distinct paths forward here. Path 1, the macro hydrogen economy scales rapidly thanks to those government subsidies, and the new management team successfully fixes its margins and stops the cash burn. Path 2, the unchecked spending continues, and massive, inevitable share dilution completely wipes out the value for early investors. So as you look at this deeply polarized market, you have to weigh the evidence for yourself. You have to ask, does the promise of a subsidized government-backed hydrogen future outweigh the immediate, dangerous reality of extreme cash burn and shareholder dilution? It's a high-stakes question, and how you answer it will define whether you see Plug Power as the future of energy or just a trap waiting to be sprung.